The president will sit down with financial regulators today to discuss their progress in implementing Dodd-Frank. It's a 2010 Wall Street reform law. Although the legislation was signed into law over 3 years ago, many of the rules have yet to be completed. So, Zach, what hasn't happened yet?
Almost everything, unfortunately. There are hundreds of new regulations that need to be written under Dodd-Frank because it covers the entire financial sector, everything from mortgage loans and overdraft provisions to derivatives trading. And regulators have basically missed an awful lot of deadlines on getting their rules finalized because banks have been lobbying really, really aggressively to try and water the rules down at the agency level. They lobbied really hard against Dodd-Frank, tried to stop it. When it became clear they couldn't stop it, they tried to weaken it and soften it. And now that much of the law is in the hands of regulators, they've been trying to hamstring regulators. And so we have these ridiculous rules like the Volcker Rule proposal, which the Volcker Rule is supposed to be pretty straightforward. Banks that accept government-insured deposits are not supposed to be allowed to place bets in the securities markets for their own benefit. That's it. They can trade on behalf of clients, but not for themselves. That rule, as proposed, is over 300 pages long, and that's almost all loopholes and exemptions, and then just bureaucratic claptrap. So that's a problem that things haven't been implemented. But in other cases, there do seem to have been some real successes. The new Consumer Financial Protection Bureau's enforcement operations, for instance, have been particularly aggressive, much more robust than what we saw when those types of regulatory things were the purview of other regulators like the Fed or the Office of the Comptroller of the Currency. So I think Obama's looking for an update here, where things are going, where they want things to go, and whether the law is going to continue to be delayed and watered down.
Yeah, and the White House expects to have representatives from the SEC, CFTC, and the Fed and other organizations there. Will this meeting actually make that difference? Too little, too late? What do you think?
Well, I think the time to be putting if you wanted to put the screws to the regulators and say, hey, crack down on the banks, the time to do that was in 2008, and then again in 2009 and 2010 when this legislation passed. It has been 3 years since this bill passed, and the law is not fully on the books. And there wasn't, it's not like the Affordable Care Act where there was some set of provisions saying, these things cannot be implemented for 3 or 4 years. There were deadlines, and many of those deadlines have now been missed. So I think the administration's kind of just looking for an update. Why are things taking so long? And a lot of these regulators, they're very sympathetic to the industry and the industry's line on this stuff. So I think the administration wants to know what the regulators are thinking, why they want these loopholes and exemptions that they've been putting in place, and why it's taking so long. Even industry sympathetic regulators can be frustrated with the process of implementing a new rule. So I think there's quite a bit to talk about. And as you mentioned, there's a lot of different agencies that are involved with this. You've got derivatives regulators, consumer regulators, bank safety and soundness regulators, and everybody's got a different set of sort of institutional interests at stake here within the bureaucratic regime of the executive branch.